Good morning, folks. It's FOMC day today, and the Fed's expected to cut interest rates. And the only question now that remains is by how much? This article that I posted up on X yesterday from MarketWatch reads as follows. A cut of 50 basis points would, quote, generate howls from Donald Trump, who will contend that the Fed is trying to help Kamala Harris. Of course, in this crazy election cycle, politics is going to come into everything. The question, which probably doesn't really need to be answered, is whether the Fed is politically biased or whether they may have been got to. I think it's not worth asking that. But an aggressive rate cut could keep central bankers in the limelight as the election approaches, he wrote. Powell, meanwhile, seems certain to receive criticism from both sides of the aisle, regardless of Wednesday's decision. A trio of Democratic senators, Elizabeth Warren of Massachusetts, Sheldon Whitehouse of Rhode Island, and John Hickenlooper from Colorado, released a letter to Fed Chair Jerome Powell urging a cut of 75 basis points. So is that political, or is the economy in such bad shape, such desperate situation that they're correct? Now, the thing is, you're probably in a trade or thinking of getting into a trade on this FOMC day, and maybe wondering how to go about it and what your strategy should be. So I'm going to go through that very quickly with you, point out a couple of things. We'll have a look at the chart positions we got, and I'll tell you my general strategy. So let's quickly read through my notes here, which I've thrown up very quickly for you. I'm sorry, I had to restart. A truck just started up outside in the street, making a little bit of noise. The general idea on rate cuts is this. Let's go and have a look at the CME Group Fed Watch tool. You can access this online. It's free. 11 hours and 11 minutes and 23 seconds to go before the announcement. This is the way it stands at the moment. There's a 61% chance that they'll cut 50 basis points. There's a 39% chance they'll cut 25 basis points. 2 days ago, when we looked at this in the video, this was 67 and that was 33. So shifting back towards 25 basis points. Personally, I don't think they're going to go 50, even though, and this is a bit weird because normally I would lean towards 50 quite strongly based on these stats. But personally, I don't think we're going to get 50. I think we'll get 25 for a variety of reasons that I don't want to cover right now. Given that, what should our strategy be and what is the market going to do about that? Right, so the problem is that this is the first rate cut in about 3.5 years. I can't remember the exact number of months or years, but it's around about there. And it's a big, big deal. Everyone's hanging on it. The market's hanging on it. The hedge funds, retail traders like you and me. And everyone's looking at this. And these are the questions we need to ask. Are we going to get 50 or 25? The answer to that is we really don't know. I think it's probably 50-50 at the moment. The next question is what will Jerome Powell say half an hour later after the announcement? Is he going to be dovish or is he going to be hawkish? We don't know. We have got no idea. I think he'll probably be leaning towards the dovish side, but he may not. We don't know. So we've got two imponderables so far. Not imponderables, we can think about it, but questions that we don't know the answers to. The third question, and probably the most important, is how is the market going to react to those two variables that I've just mentioned now, whether it's 25 or 50, and whether Jerome Powell's hawkish or dovish. So the third variable rests on the first two, and we still don't even know what it will be depending on the first two. So we've got three completely different imponderables. Multiply 3 by 3 by 3. If you know mathematics, you can get some idea of the probabilities of a good outcome. So roughly 1% chance, 1 in 96 or something like that. So what's the strategy? So what I want to do is quickly look at the charts and show you what positions that we're in and what my strategy is very quickly. I don't want to focus too much on the technicals, but I do want to finish this off with a very important note, so wait till the end, basically. So I've got one currency position open, that's the pound against the US dollar. It's actually two positions because I'm fully hedged on that, awaiting the FOMC announcement. The rates cut announcements and Jerome Powell's statement thereafter, and the questions and answers will affect certain instruments more than others. Currency is one of the big effects, obviously, being directly related because it's interest rates. And then other things like metals and even natural gas and some of the energies, and obviously bonds and stocks. But probably stocks are, and maybe even bonds, are the least affected by this sort of thing, interestingly enough. So we only have one position that's fully hedged on the pound. We'll relook at all of this. This map may change completely after today, really. We're short on NASDAQ, short on S&P, and we're unhedged on those, but those are relatively small positions, and I'm willing to add on certain technical moves on these charts. I'll give you an example. On the S&P, if this fails to move down, my contingency plan is to resell at that first red blob and then to resell again after hedging. So if that blob there fails, for our second short position. We'll hedge immediately and then resell a little bit higher up. So fairly small positions at this moment. Same sort of idea and strategy on the NASDAQ. So not a lot to say there. We've also got a few stock names going. We've got a long on Apple, a long on Microsoft. We'll be looking at those before the FOMC and seeing how those charts look. We'll have a few hours before leading up until the meeting. We're short on NVIDIA, short on IWM, nothing on Tesla, and short on XLF. And those shorts are offset by some of the longs that we've got on other instruments like gold and Bitcoin. Still long on Bitcoin, nothing's changed. Actually just been buying more on the dips. And gold, we fully hedged our long position, so just awaiting FOMC. So gold and Bitcoin might be quite sort of vigorously affected by what goes on this afternoon. So these need to be watched very carefully. Let's go to energies. Natural gas, I'm not going to do a technical on natural gas. I'll post up yesterday's video and link to that at the end of this one. But while we're here, let's just quickly have a look at the day chart over here on the Henry Hub. And here's the day chart, and you can see we're still trading within that channel. We pulled back down to about 2.25 on the spot, down to about 2.3 on the Henry Hub. We could get back down to 2.25 on the Henry Hub. That's at this red line, and I've covered that in yesterday's video. There's the 200 period moving average. We really want to stay above that level there. That's the key level on natural gas. This instrument, as well as the other energies, will be affected by the rates announcement because they're all priced in dollars. The dollar will be affected quite sort of starkly and dramatically, and therefore some of these other instruments will be too, including natural gas, oil, etc. And we're still short on Brent crude oil. Just to quickly update you on this while we're on this chart. We haven't taken a second short yet. We're still short from there, waiting to get up to there to re-short. Once again, this might just pop up after the FOMC into our selling zone and give us a chance to sell there again. And then a couple of other things. I'm still short on the dollar South African rand and the pound South African rand. We've got a flat bottom break there. Again, I covered that one of the previous videos. And then softs and grains, well, these will all be sort of battered around and messed about by the FOMC as well. Everything's priced in dollars, so everything's affected, but more predominantly the sort of safe haven, low yield things like Bitcoin and gold. They really do need lower interest rates in order to progress further because they don't produce any yield for the holders of those instruments. So that's it, folks. But what I really wanted to say to you, let's go back to Twitter and go to X. If you're not following me on X, Twitter, it's free. I post up there several times a day. Let's go back to the FedWatch tool. So we're just waiting for this now. This might move as the day progresses ever so slightly, but I think that's pretty much locked in. I think the market is expecting more and we're going to get less. And put that into your pipe and smoke it because that's going to affect the way the market moves. I think most of the moves will actually probably take place at the time of the rates announcement, more so than when Jerome Powell begins to speak, because I think we may get 25 and not 50. And I think the market, as you can see from these stats, is leaning towards 50. So there could be a great letdown, a great sense of disappointment. Think about what that means to the market. All right, so what's the strategy going into the FOMC meeting later on today? I've told you my positions, roughly. They may change as this day progresses leading up into the meeting. I won't have time to post those on YouTube or X. I'm also ready to hedge at the drop of a hat. So if something starts going against me dramatically, I'll immediately hedge those positions. And some of them I've already hedged ahead of time, like gold and cable, the pound, and a couple of other things. So protect yourself. Don't take big bets. Don't go FOMO. Don't go all in. Don't go to the moon. You don't know what's going to happen. As I said, we don't know if it's going to be 25 or 50. We don't know what Jerome Powell is going to say, and we don't know how the market's going to react. Well, good luck, and I'll see you in the next video. I hope you enjoyed it. Trade carefully. Be safe. Bye.
Got my charts and graphs laid out on the table. Swing trading gold just as long as I'm able. Watching those candlesticks, hoping for a rise. Gotta stay sharp, keep my eyes on the prize. Stocks on the ticker, every second counts. From energy giants to small cap amounts. Day ends in green or red, there's no in between. I'm chasing that momentum.